You think banks are where your money stays safe? In truth, they're finely tuned machines profiting from your lack of awareness. They don't lie. They just hide what matters most: stealthy fees, unfair interest rates, and full control over the account you believe is yours. This video will break down 7 secrets banks don't want you to know, and more importantly, it will guide you out of financial dependency and into true money mastery. What you learn today could change everything about how you save, spend, and grow your wealth. And now, let's begin with the first secret banks hope you'll never discover. Most people think banks are the safest place for their money. But here's the truth. Banks don't just hold your money, they control your financial life. Every account, every service, every product is designed to generate a steady stream of income from your pocket into their profits. They don't have to trick you. You walk in willingly. They don't set traps. The trap is already built into the terms you never read. And all the while, they smile politely as they quietly drain your resources. That's not service. That's a system. Banks don't aim to make you rich. They aim to keep you dependent. They sell financial support, but what they really create is a chain of behaviors that benefit them. Credit cards, loans, auto payments, all tools to keep you spending today and repaying forever. The belief that banks are here to help is the very mindset that traps you in cycles of debt, fees, and blind trust. Every product has a purpose, and that purpose to keep your money in motion, not for your wealth, but for their gain. When you don't have a clear financial strategy, the bank decides for you, through systems designed long before you signed up. And in that game, you never win. They smile while deducting hidden fees. They send special offers loaded with terms you'll never fully read. Reality isn't cruel, it's just brutally clear. If you don't control your money, someone else will. And they'll get very rich doing it. Ever wonder why your money keeps shrinking even when you don't spend it? The answer lies in hidden banking fees, buried deep inside lengthy terms you never read. Monthly maintenance charges, inactivity penalties, service fees. These are designed to extract your cash quietly. A small $2 monthly fee may seem harmless, but over time, it compounds into hundreds lost. And that's just one account. Most people aren't being robbed. They're being drained slowly, legally, and invisibly. It's not theft. It's engineered leakage. And the less you notice, the more they take. Banks don't want you to see it. Statements are cluttered. Charges are labeled vaguely. Processing fee, system charge. So you won't question them. You're trained to accept deductions as normal, to ignore the fine print. And if you stay passive, they'll keep pulling. But the moment you push back, the game changes. Suddenly, non-refundable becomes negotiable. Hidden charges disappear when challenged. Because the fees aren't just financial, they're psychological. They rely on your silence, and silence is what makes their profit model work. The fix isn't complicated, it's awareness. Call your bank and demand a no-fee account. You'd be surprised how quickly they comply when faced with losing a customer. If they don't, leave. There are smarter institutions that respect your money. More importantly, review your monthly statements. Every 5-minute audit is a message. I'm watching, and I won't be taken lightly. It's not about paranoia, it's about principle. When you start questioning fees, you stop giving permission to be quietly exploited. You think saving money means growing wealth? In reality, it's often a slow financial leak. Traditional savings accounts offer interest rates below 1%, while inflation climbs at 3 to 4% or more annually. That means your money is losing value every single year. You might feel secure watching your balance sit still, but behind the scenes, its purchasing power is fading. It's like ice melting in your freezer. You don't see the loss right away, but by the time you need it, it's already smaller than you thought. That's not security. That's silent erosion. Meanwhile, banks take the same money you parked for safety and loan it out for massive profit. You get $50 a year. They make thousands. That's not a fair exchange. It's a transfer of opportunity. Banks want you to believe you're doing the right thing by saving, while they leverage your money to invest and expand. You call it peace of mind. They call it a profit stream. The longer you leave your money idle, the more it works for them. And the longer you wait, the more you fall behind. To break the cycle, start by moving towards smarter savings vehicles. High-yield online accounts offer significantly better returns. But better yet, Begin investing in tools with long-term potential. Index funds, ETFs, real estate, or even your own business. Wealth isn't grown in stillness. It's built through motion and strategy. Money that sleeps loses value. Money that works multiplies. The goal isn't just to protect your funds, it's to position them where they can thrive. That's the real definition of saving smart. Credit cards are marketed as tools of freedom. In reality, they're velvet handcuffs, soft to the touch but designed to lock you in. Banks don't want you to pay off your balance each month. They want you to make the minimum payment, so interest accumulates endlessly. That's where the real money lies. The longer you carry debt, the more they earn. You think you're managing your cash flow. In truth, you're chained to a growing balance. It's not flexibility, it's a debt trap dressed in luxury. When banks see you spending more than you repay, they increase your credit limit. Sounds generous? It's a trap. They're giving you more rope, hoping you'll hang yourself with it. Then come the reward points, cashback, travel perks, all sugar-coated hooks. You chase small benefits while paying massive interest. Those perks mean nothing when you're paying 20% on a carried balance. The illusion of gain hides the certainty of loss. It's not a reward program. It's a well-crafted illusion built on your desire to feel financially deserving. Breaking free doesn't require brilliance, just discipline. Use your card only when you have a repayment plan in place. Never spend emotionally. Spend strategically. Prioritize clearing credit card debt above all others. The interest is usually the highest, and never let flashy benefits dictate your choices. Real financial freedom doesn't live in a credit limit. It lives in your ability to control your behavior. You don't win this game by playing along. You win by playing smart and stepping out before the system tightens its grip. Banks don't lie when they say investing carries risk, but they exaggerate that risk to make you afraid. They want you to believe investing is only for professionals, so you leave your money in their vault. Meanwhile, they take that same money and invest it aggressively. Stocks, bonds, real estate, all while telling you to play it safe. They label savings as security while using your funds for high-return ventures. Their silence isn't ignorance, it's strategy. The less you know, the more they grow. And as long as you stay afraid, your money stays parked and under their control. You don't need to be a financial genius to start investing. What you need is clarity. Money that sits still doesn't grow, it erodes. Investing isn't gambling if you choose the right vehicles, index funds, ETFs, long-term real assets. These tools have outperformed savings for decades. Banks want you to believe investing is complicated so you never begin. But every year you delay, you're losing ground. You're not just missing profit, you're forfeiting freedom. The real risk isn't investing. The real risk is staying stuck where your money does nothing. The solution isn't reckless action, it's informed action. Start small, invest in what you understand, and grow steadily. Learn how to allocate assets, respect risk, but don't be ruled by it. Every day you hesitate is a day the bank continues making money off your hesitation. Your money can serve you, or it can serve someone else. The choice isn't made in theory, it's made by what you do next. If you want financial independence, investing isn't optional, it's the price of entry. Your money is in the bank, but that doesn't mean you can use it whenever you want. As shocking as it sounds, banks can freeze your account, block transactions, or delay withdrawals if they deem something suspicious. A large transfer, a cash withdrawal, even an overseas payment. Suddenly, your access is restricted, not because you broke a rule, but because they can. Your financial security becomes subject to an algorithm and a risk model. You're not the owner anymore. You're a guest, and one they can turn away at will. In economic downturns or liquidity crises, banks have historically limited withdrawals to protect their own solvency. But who protects you? Imagine needing urgent cash for a medical emergency or family crisis, only to be told your funds are temporarily inaccessible. Policies are vague, appeals are slow, and while you're waiting for approval, bills keep piling up. This isn't paranoia, it's a structural weakness in centralized control. The truth is, having money in the bank doesn't guarantee full access. It guarantees conditional access based on rules you didn't write. The smart move is decentralization. Keep funds in multiple banks. Maintain a portion in cash, gold, or digital assets that you control. Notify banks in advance of large transfers. And most importantly, don't depend on one system. Diversify your liquidity like you diversify your investments. If one gate closes, another must remain open. You can't control how banks operate, but you can control how vulnerable you are to their decisions. Financial independence means not just growing your money, but guarding your ability to use it when it matters most. Ever wonder why loan interest shoots up overnight while savings rates inch up like a snail? That's not coincidence. It's strategy. Banks raise borrowing rates quickly to protect their margins, but when economic conditions favor savers, they drag their feet. The game is simple. Widen the gap between what they pay you and what they charge others. That spread is pure profit. You think it's market-driven. It's profit-engineered. While you earn peanuts on your savings, they feast on your debt. And the worst part? Most people never question it. Interest rates are more than numbers. They're behavioral tools. When borrowing costs rise, you pull back on spending. When savings yields stay low, you stop saving. Banks capitalize on that emotional pattern. They offer alternative products with slightly better returns, but packed with fees, restrictions, and fine print. You think you're upgrading your financial strategy. In truth, you're trading control for complexity. They don't want you to think, they want you to react. And your reaction every time fuels their revenue engine. You're not powerless. Compare interest rates across banks and platforms. Negotiate your loan terms, especially if you have strong credit. Don't settle for savings rates that don't beat inflation. Explore credit unions or online banks that offer better returns. Understand how central bank policies impact lending and saving, and adjust accordingly. Most of all, stop being passive. Your silence funds their advantage. Speak, compare, switch, demand. When you learn how the rate game works, you stop being a pawn. You become a player. Banks love to create financial products that sound sophisticated. Premium savings, linked investments, flexible deposits. But behind the polished names lies a maze of fine print, fees, and vague conditions. It's not just complexity, it's strategy. The harder it is to understand, the easier it is to hide fees. They count on you nodding along, overwhelmed by jargon, signing documents you barely read. You think you're buying safety. What you're really buying is a contract built to bleed small amounts, month after month, year after year. The problem isn't the products themselves, it's the knowledge gap between the seller and the buyer. Bank staff are trained to explain just enough to comfort you, not enough to empower you. Meanwhile, you're agreeing to management fees, withdrawal penalties, early exit charges, and other traps buried in dense documents. You believe you're investing, but in many cases, you're just renting access to your own money, at a price. Products designed to appear helpful often serve one goal: recurring revenue for the bank. The defense is simple. If you don't fully understand it, don't sign it. Choose simple, transparent tools like index funds, high-yield savings, or direct investments you can explain in one sentence. Ask questions. Read everything. Compare providers. You don't need a degree in finance to protect your money. You need curiosity and caution. Banks profit from confusion, but when you demand clarity, you take back control. Complexity is their game. Simplicity is your shield. Banks don't need you to be broke. They just need you to stay attached. That's why they build an all-in-one ecosystem: checking accounts, credit cards, loans, insurance, savings plans, all interconnected. The more products you use, the harder it feels to leave. You're rewarded for bundling, so you think you're getting convenience. But what you're really getting is a financial leash disguised as service. The tighter the system, the more predictable your behavior, and the more control they have over your money, habits, and decisions. Your spending patterns are tracked, your behaviors analyzed, and as the system learns more about you, it tailors offers to keep you comfortable and compliant. It's not personalization, it's customized dependency. You're nudged with just enough incentives to stay, but never enough to thrive. Automated renewals, loyalty perks, easy credit approvals, all designed to reduce your friction and increase their profits. The more you let them simplify your life, the deeper they root themselves into your finances. This isn't support, it's subtle submission. Freedom doesn't come from rejection, it comes from strategic detachment. Cancel what you don't need. Move money across systems, build income that flows beyond traditional banks. Learn personal finance so deeply that no system can trap you. When you reduce your need for credit, Avoid bundled packages and choose tools that serve you, not them. You reclaim your leverage. Dependency is their long game. But clarity, intention, and education is how you rewrite the rules. Escaping the bank's grip doesn't mean rejecting the system. It means no longer revolving around it. True financial independence begins when you build your own framework, a budget that reflects your values, automated savings that happen without thought, and an emergency fund outside your main bank. These aren't extreme steps, they're essential boundaries. Because when you own your system, you no longer react to theirs. The more clearly you track your money, the less vulnerable you are to manipulative offers and impulse decisions. Clarity is the first step. Control is the reward. Freedom doesn't mean having millions. It means your money serves you, intentionally, productively. Investing is non-negotiable. In index funds, real estate, or your own projects. Create income streams beyond your salary through skills, side businesses, or assets. And always spend less than you earn. That one rule outperforms any complex formula. When your income is diversified and your expenses are disciplined, you no longer fear system shifts or policy changes. You are no longer a passive participant. You are the architect of your own security. Keep learning. Personal finance isn't just about numbers, it's a form of empowerment. Read books, watch educational videos, talk with people who live what you aspire to. Every small habit, every choice to delay gratification, to question a fee, to invest intentionally, is a step out of the cycle. Banks may be sophisticated, but knowledge makes you sovereign. The more you understand, the less you depend. The less you depend, the more you own your future. That's not just financial freedom, that's real freedom. You don't need to fight the banking system, you just need to stop being controlled by it. Financial freedom doesn't come from how much you save, but from how much power you have over your money. When you understand the rules, you no longer play blind. When you take action, you begin rewriting your future. Build your own system. Question everything. Learn every day. Your finances should serve your life, not the other way around. The banks may be smart, but you can be smarter. With intention, strategy, and courage, you can exit the cycle and design a future on your terms. Wealth isn't about luck, it's about knowing how the system works and choosing to rise above it.